these are my 3 predictions about Canadian real estate markets. Number 1, believe it or not, we're going to continue to see cap rate compression across Canada, even though we've had 5 bumps in interest rates. Let's take the industrial markets as an example. Right now, in key markets like Toronto and Vancouver, we have seen such an acceleration in net rental rate pressure upward from a leasing perspective. We haven't seen this kind of rate growth literally in 30 years. The gap between going in yield and sustained yield has never been wider, and this is what's driving aggressive bidding for industrial product. Now, the second observation, also connected to the industrial markets, is will we break out of this low availability environment in Vancouver and Toronto? We are literally at 35-year lows from a vacancy perspective. It's my prediction that we're not going to be able to break out of that before the end of the year 2020. The reason? Supply constraints. Not only have we seen a significant increase in costs like construction and development charges, land prices are at record highs, but we're seeing approval processes that are just bogging down the ability of developers to respond to changing market conditions. That's a reality that's not going to change over the near term, and it differentiates markets like Vancouver and Toronto from its US counterparts, where supply has a greater capacity to respond in today's marketplace. That means even within the context of softer overall demand momentum, we are going to continue to see rental rate pressure as we head towards the year 2020. My third prediction is an interesting one, and it relates to the Canadian office markets. What we are going to see is an acceleration of inbound expansionary growth driven by international technology companies who see Canadian markets as their destination of choice. The reason for this is that the total occupancy costs and labor costs are significantly lower in Canada. The US has experienced a lot of wage inflation. Canada, on the other hand, remains tremendously competitive, and this cost advantage is going to drive inbound growth as we look out towards the year 2021.